Tech giant Apple, these earnings out just moments ago, posting its first quarterly sales drop since 2003. The stock poised to shave almost 50 points off the Dow tomorrow. With me now, an Apple bull and an Apple bear. The bull, Jason Rotman, and Apple bear, Gary Kaltbaum. Glad to have you both here. So I feel like I should start with the bullish side, so we're contrarian. Jason, what do you make of the numbers?
Well, listen, first of all, Deirdre, contrarian is relative. I mean, if I'm a contrarian in a 24-hour period because Apple's down, but in a multi-decade period, I think I'm with the trend here. Keep in mind, from 1991 to 1997, Apple lost 80%, and then in the next 18 years, its market cap went up 27,000%. So this is to be expected. This is not a surprise, okay? The market's overbought in general. I think if you own Apple, you should not sell it. I think that'd be foolish. Apple has the iPhone 7 coming out in the fall. 200 million users have not upgraded to a bigger screen. There's so many reasons to be a bull over the long haul for Apple. Not in the next week, but in the next several years, it's a hold.
All right, I hear what you're saying. And Jason, I also take your point on it not being a surprise. Tim Cook actually told the Wall Street Journal we are in the middle of a challenging quarter. So, Gary, I want to bring you in, though, as the bear. Are Apple's best days behind it?
It really depends if they come out with some other great category killer. They've been fantastic at that in the past. Ain't happening right now. And here's my big issues. Number one, they lowered guidance throughout the quarter and couldn't even beat the lowered guidance they missed. And if anything Apple's been great at is beating lowered guidance throughout the last few years. The other part of the equation is guidance. Guidance is worse than this previous quarter, so I'm just not so sure that's going to drive things. I think the only thing the stock has going for it right now, it's trading at about 11 or 12 times earnings, but when earnings are dropping 15%, that's why you get a cheap stock. And I think maybe, I don't know if it's going to, tank big time, but I do believe you probably see low 90s, mid 80s, something like that. And if the market gets in trouble again, maybe a little bit worse. I just think the growth days of Apple are over right now.
All right. Jason, I want to bring you back in. You just heard Gary say the growth days are over, and I want to ask you about one area where Apple had seen phenomenal success, and that was in China. I'm just going to look at my notes here because iPhone sales were booming, but sales to Greater China, which includes Hong Kong and Taiwan, down 26% to $12.5 billion, and that was really a tough comp because that was down from 71% growth. So to what extent is Apple's fate hinging on the Chinese consumer?
Very good question, and especially relevant because Tim Cook has now, I guess, infamously, really played up Apple's presence in China. How I'd really like to respond to that is, first and foremost, Apple's services are now its game changer. Really, Apple Music is poised to possibly beat Spotify and other services as the world's #1 digital streaming music service. Apple's music growth has completely trumped the pace of that of Spotify's. Furthermore, there's a 26% increase in the services revenue in Q1. So all the Apple naysayers that saying Apple's hardware days are over, I think Apple's being smart by focusing on more of their services. It's a buy.
It's a buy. All right, Jason, we're here. Gary, I don't want to let you go without letting you at least defend the sell position. I heard, what do you think about the pricing? If it does go to the 80s and the 90s, is that enough of a bargain? I know you don't think that the best days are in front of it, but it's still a bargain.
I'm a growth guy, and my worry is I know they have music and other things, but their big driver is the iPhone, and the iPhone is not what it used to be. And something Tim Cook said was that we're in the early innings of the iPhone. I'm sorry, that is a wrong statement. We already have tons and zillions of smartphones out there. We're not in the early innings. They're going to have to come up with something new. They started with the iPod, then the phone, then the iPad. iWatch isn't working. They're going to need something else or else. And by the way, one other thing. They are a victim of their own greatness. Once you become so gargantuan, it is very tough to continue to beat your growth rates. And I think they're in the realm now of like the Walmarts and the Intel that got so big you just can't grow the business anymore. You end up being a value in a dormant stock.
All right, although to those other two examples, those are more companies and types of companies that have been disrupted by leaner, meaner, and different models. We're going to talk about Apple another day. In the meantime, I thank you both very much. Points well argued. Jason Rotman, our Apple bull, and Gary Kaltbaum, our Apple bear.